Hi, everyone. This is Jason Bierk of Wall Street for Main Street. Welcome back to another Wall Street for Mainstream podcast interview. Today's guest is a special guest, and it's his first time on our podcast. It is Ned Schmidt from the Agri-Food Value View newsletter, and I've been following Ned's work for a number of years when he does interviews on Financial Sense, and he's had a lot of very good calls in the agricultural sector. So we're very delighted to have him on for a podcast so he can educate myself and our listeners about investing in food and agriculture. So thank you for joining us here today, Ned.
Hey, it's good to be here. How are you tonight?
Well, I'm indoors and warm, but in the DC metro area, we're just getting pelted with a last-minute snowstorm here, and I guess like in spite of global warming or whatever is really going on, we get these Arctic winds and amazing snow. But that's off topic. So let me ask you the first question, Ned. Let's start off with a real simple question. We have some listeners who are beginning investors. So can you please tell us some of the different ways to invest in food and agriculture without buying a leveraged commodities futures contracts? Because we've all, heard the horror stories of either families or friends who, they've tried to get rich quick and they've bought like with very little money down, a soybean contract or a coffee contract, and then they've ended up losing their shirt and, ending up owing even more money.
Yeah, I think most people should stay away from the futures trading. Speculating in futures is for a very special psychology for people that have very good knowledge of how those markets work. And it's just not suited for most people. It takes too much discipline that people don't want to put into. I think that most people finally come down to one of two choices. Early on in their investing, and even in midlife investing, there's enough equities of good quality that you can get the benefits of agri-foods. In other words, when you invest in technology, you don't go buy a router and put it in your closet. You go buy an equity, right? You're not going to do that. So there's a large number or sufficient number of good quality companies that benefit from agri-foods. I mean, one right off the top of my head is Archer Daniels or Monsanto or somebody like that. The other way is a longer-term investment for people that are a little longer along the wealth curve, and that's looking at some agricultural land. And that takes, it's difficult for many people to do because it's a lumpy investment. You need big chunks of capital. It takes a lot of work to find a piece of property. And so most people start out with some of the equities, and we can talk about those later on.
Now, in terms of some of the sectors you mentioned, aren't there also like tractor companies? So there's the picks and shovels way to do it. The guys who aren't actually, creating the seeds or making the food. They're just selling the farmers their picks and shovels, essentially. Like a John Deere or Caterpillar and those guys. And then there's also the potash farmers too, like all the different levels that go into like the supply chain and stuff that also make up, the supply chain. And there's also, at the high end, right, the stuff before it goes to the grocery store, have your Tyson Foods and those types, right? Those are the other types in the industry.
Well, let's talk about the agricultural cycle. You've got to we want to get as close to the farmer as we can. And so let's talk about what a farmer does. A farmer has to prepare the field. In some areas, they still plow. They're going to apply fertilizer. And before I go on, we're not interested in fertilizer stocks. They're going to order seeds. So we have a couple of things we need. We need farm machinery, which is companies like AGCO and Deere. And the difference between those two is that Deere dominates the North American market. AGCO only gets a quarter of its sales from North America. So 75% of their sales is outside the United States. That's beneficial because it's a mature market in the U.S. All right, we need to put down some seed. That's Monsanto and Syngenta. Syngenta is SYT. Uh, they compete head on. There are a couple of other seed companies, but they're so diluted by other in the other companies, they're not attractive. Right now, Syngenta is the one that's cheapest, but you want to, if possible, own both of them. Now, as the crop, in that crop and to the fields, you will apply pesticides. We have lots of genetically modified corn now that wards off the insects. But that, again, is Monsanto and Syngenta, so that we have to apply pesticides where necessary. Okay, the corn and soybean crop grows, and then we've got to harvest the crop. That, again, brings us back to the machinery companies. You've got to have machinery to harvest the grains. Now, once the farmer harvests his grain, that grain has to be collected and processed partly for users. It has to be collected and shipped to China. That's a group of companies we call agri-collectors and agri-processors. The two best names are Archer Daniels, ADM, and Bunge, Bunge. The symbol is BG. And both those companies are good names. All of them we've named so far are core holdings. We're pretty much not interested in the food companies that actually sell to the retailers. Because by the time it gets to them, the money's been taken out of the value chain. In other words, the food companies
Margins are bad?
The food companies pay Archer Daniels and BG for either the grains or the processed grains, like soy oil. And then that money is distributed by the farmer to all those vendors. So we're not interested in, per se, the food companies. We're interested in...
Hello?
I'll take a breath there and let you ask another question.
Okay, we cut out there for a second. So you said you're not interested in the food companies. You're interested in, sorry, the thing went out for like 10 seconds or 20 seconds. So
yeah, we're interested in those companies that are involved in the production, because I remember Archer Daniels and a BG will sell this grain to China and to Kraft Foods and whoever, Unilever, and that money then goes to the farmer, and that farmer then distributes that money to all the people that provide him with goods and services. Now, one I left out, and it's kind of like something related to what you mentioned earlier, is Agrium, AGU. Now, a lot of people talk about this as a fertilizer stock, and fertilizer is important to this company. But they also have a retail farm supply network in North America and Australia. This is where the farmer goes to get all those things he needs to do his farm, soap, dope, and rope company. But they get higher margins because they're also selling services. You don't want somebody to sell you a truckload of fertilizer. You want him to sell you a customized load of fertilizer for your soil and your crops and your climate. And that's a higher margin product. So Agrium is one we want to be interested in. Yeah.
Okay,
No, go ahead.
Okay. Yeah, very, very good. And I think you talked about the top of the supply chain there that's closer to the consumer, the people, the grocery stores. It's a common knowledge that the grocery stores just have an awful margin, and then it sounds like the Tyson Foods, the Smithfield Foods, those guys are just paying higher and higher input costs, and they're not really as able to pass on as many costs. It doesn't sound like that great a margin business either.
Right. Now, one of the things we've got going on right now, and it's going to last. I mean, the cycle is heightened right now, but of long-term interest is animal proteins, and that's beef, pork, and chicken. The beef cycle in the United States, we have a shortage of beef because of the last couple of years of drought in the southwestern United States. And retail beef prices are hitting all-time highs. There's going to be a serious shortage of beef in the United States through next year. But globally, we have a shortage of animal protein. In economic terms, what's happening is in China and in the developing world, incomes are growing faster than our ability to produce food. And that's particularly true with animal proteins. So beef, pork, and chicken are going to be extremely strong markets for the rest of our lives. But we need to remember there's always going to be cycles within these. Now, we kind of have a shortage of companies in that industry because nobody ever wanted to be in that industry up until the last 10 years. The best play that we found is JBS of Brazil. Now, why would we be interested in Brazilian stock? Well, because it's not a Brazilian company. 75% of this company comes from sales in the United States. They own Swift, which is a big pork and beef processor, and they own about 80% of Pilgrim's Pride, the big chicken producer. So this is a Brazilian-based company, but 75% of this business is in the United States. It is the world's largest animal protein company. There isn't a bigger one around. Now, it trades in the U.S. As an ADR, JBSAY. Okay. So that's one that's interesting. It's a little bit volatile, but it's one investors need to look at.
Now,
Go ahead.
Now, you mentioned Brazil there very briefly, and the U.S. has been called the quote-unquote Saudi Arabia of food by many experts. Do you see the U.S. maintaining its status as one of the world's top food providers, or do you see any other countries like Brazil starting to outcompete the U.S.?
Well, I mean, the big producers are the United States, Canada, Brazil, Argentina, and Australia. After that, it's all the other. Oh, I forgot the Ukraine. So after those nations, they're so small they're not really hard to get a handle on. Brazil is clearly the heavyweight in the agricultural sector because it had so much undeveloped land. Brazil has a fundamental problem in that they can produce it, but they can't ship it. The country, in the United States and Canada, once the farmer combines grains and puts it in the truck, it's never seen by a human being again. The truck goes to the mill loads it on a railroad car, the railroad sends it to the coast, or it goes on a barge and it goes down the Gulf. It's never touched, or it never rides in a truck more than 25 miles. In Brazil, most of the grain has to be trucked hundreds of miles over dirt roads to the port, and then the port structure is so bad that it may take 30 to 60 days before your ship is loaded with grain. And the consequence is that a U.S. farmer, if the prices were the same, in other words, if the landed price in China of corn or soybeans was the same price the U.S. farmer would make more money. And so Brazil's an opportunity, and it's a big opportunity for AGCO and BG. BG has big roots in Brazil and Argentina. But it's hard, other than that, to make a play on it. I mean, JBS came out of the beef industry in Brazil. Brazil's got a big beef industry because they have lots of grazing land. But they saw the problems of being a company only in Brazil, and so they moved their assets into dollar assets, so they were somewhat diversified. Now, go ahead.
Yeah, I mean, Brazil, it just has a lot of potential. But if you talk to Brazilian, they'll say it always has a lot of potential when their politicians are, have their heads on straight. And they just have, a great climate. It's very warm there. They have, multiple planting seasons. So they have certain advantages that the U.S. does not, but their private sector just has not made, the astute allocations of capital that the U.S. looks like, from what it sounds like, in the supply chain, in the farming, and the infrastructure.
Correct. Yeah, correct. And I'm just scanning my list here for one you don't hear much about is a company called Zoetis, Zoetis. The symbol is ZTS, and it was spun off last year from Pfizer. It is an animal health company. They make the drugs for cows and horses and dogs and cats and chickens and everything else. And so this is the only company in this industry that's a standalone investment. It's an S&P 500 company, pays a dividend. What's kind of interesting is their North American business is about, if I remember right, about 2/3 pets, our dogs and cats, and about 1/3 horses, cows, whatever, pigs. Outside the United States, that's flipped. And about 2/3 of their business outside the United States is in livestock. And so there's a big opportunity in livestock in the developing world simply because they didn't have the drugs available historically, and they will use more of them. But kind of the fun kicker in this is pets in China and the developing world. One of the fastest growing sectors in China is pet food, because if you beam yourself back to the Mao era, people didn't have enough money or food to have a pet. Now they do.
Or protein, because people used to be, in the Mao era, right? They were only on rice and vegetables, right?
That's right. Yeah. Same kind of thing. So while we're talking about, since we just mentioned China, if I could buy a pet food company in China, that's one thing I would do. Is in thinking about agri-food, especially outside the United States, you've got to remember that what people eat in New Jersey is not what people in the rest of the world eat, okay? One of the most important vegetable oil in the world is palm oil. It comes from the palm tree. And it's produced primarily in Indonesia and Malaysia. The biggest palm oil company that's public and trades in the United States is Wilmar International. And this is no fly-by-night company. It's a $40 billion company. And it is the largest single seller in China of palm oil. Now, palm oil is the biggest vegetable oil in the world, and it's the principal oil outside North America and Europe. They don't use butter. They don't use olive oil. They use palm oil. And so Wilmar is the best play on that. You got to be a little patient with it. It's not going to run away tomorrow afternoon. but it trades in the United States as an ADR. WLMIY. I might have got that wrong, though. So you've got to look around for some of these things that aren't quite mainstay, like a Wilmar, like a JBS. And I think you'll find them interesting because they'll challenge your analytical skills, too. A couple of things I don't like. I don't like any of the diversified ETFs. They're just so, in my view, and this is my view only, they're so poorly constructed that they don't give you what you need to have in terms of diversification. You're better off starting with a small portfolio with small pieces of about 5 or 6 of these companies, and they all pay dividends, and they generally been increasing your dividends. So it's the performance has been good, but they're not going to be as exciting as some high-flying technology stock that's going to crash and burn on you. BlackBerry was exciting at one time. I'll let you get a word in now.
Well, that was some very in-depth analysis, and I think our listeners will really like that, especially ones who are not as familiar with food and agriculture and investing in that type of the sector. But, you talked about technology, but there is a lot of technology going into food and agriculture. What types of innovation have we recently seen in food farming and agriculture the last few years, and what types of innovations do you see on the horizon? Because, I'll just mention a couple of the things I've read about, and maybe you can, comment if you think these things are going to be implemented. I've heard of driverless tractors, perhaps, in the U.S., taking, Google's technology, because, on a highway, there's a lot of twists and turns and traffic accidents, but in a field, you could just have a driverless tractor. There's not going to be as many cars to hit or anything like that. And then I've heard possible drones dropping pesticide seeds or fertilizers, or flying over crops, all the time, taking pictures, monitoring them for farmers.
Well, the modern tractor, in other words, when a farmer is planting its crops or when he's applying fertilizer, he has, or she, the entire farm computer mapped. And it tells him in the tractor, as he's driving across the field, where he is by his GPS, and it tells the tractor and planter how much seed to be putting in the ground right now, or how much fertilizer to be applying, so that the farmer is minimizing the amount of fertilizer and maximizing his production through computer automation of the tractor planting system. There's more computers power on a modern tractor than the astronauts had when they went to the moon, I assure you.
Wow.
But where we're looking for it, and we found a couple of them, I'll mention, that's an evolutionary process. In other words, John Deere is not a computer play. What we're looking for is the companies behind it that are bringing in technology from the outside world. There was one that was mapping the weather conditions and rainfall in a field and the growth of the crops. It started about, 3-4 years ago, and Monsanto just paid $900 million for them. So what we're looking for is companies bringing technology in. One of those companies, and these are two names that I'm not recommending you buy, so don't send me an email when you get mad at me. One of them is a company called Aqua Bounty. It trades on the London Stock Exchange, and if you do a search for Aqua Bounty, you'll get to it. They have the first approved genetically modified salmon in Canada. They've been approved for production of the eggs by the EPA. Now, it takes 2 approvals to produce genetically modified salmon in Canada. One to produce the eggs, and the other to grow the fish and sell it to people. So one approval is to grow it, the other is to sell it. they've got the first approval. This salmon, if you go and look at the pictures that they have on their websites and around, dramatic increase. It's dramatic, the size of the salmon relative to the amount of feed it takes. So this biotechnology is being brought into the industry. Another one that's interesting, and it's becoming, I think it's probably has a bigger future, is a company called Where Food Comes From, WFCF. And I don't know if you bought any, I picked up a pack of hamburger yesterday in the grocery store, and I was reading the label to see what it was, and it had produced, this beef was barn raised and butchered in the United States. The United States.
Hello?
Where it was butchered. Now, personally, I don't know what a consumer does for that information. But Where Food Comes From has brought...
Hello?
And where it was butchered. Because basically you can't trust anybody, as we all know. So those are two companies that are bringing technology into the agri-food industry. And I think there's going to be some exciting ones.
Ned, now to wrap up the interview here, let's just look at big picture. So let me make sure I understand your views about the agricultural market. So you think the secular bull market for agricultural commodities is still intact?
Oh yes.
You think...
Oh yes. One of the things on that is you can't just focus on one commodity, corn or soybeans. I tracked 16 of them just to get a reasonable sample, and that's not meaningful. 50% of them are in positive price trends. And the key is that incomes in the developing world are growing faster than our ability to grow food is increasing. And that is not going to change. China is going to move 100 million people from the farm to the city in the next decade. Those people are all going to shop at grocery stores. And they're all going to have higher incomes. They're all going to go to restaurants. They're all going to waste more food. There's just no way around it. I mean, people have got to eat.
Exactly, and I think that's why food is an important part of anyone's portfolio. Is, when it comes down to it, you have to have natural gas or something else to heat your homes. You have to put gasoline in your tank to go to work or wherever else you need to go, unless you live directly in a city, and then you have to eat. So those are like some of the main staples of portfolios that'll do well, inflation, deflation, stagflation, or whatever, the stupid central banks decide to do.
That's correct. You got it, Jason.
Okay, Ned. Well, I know you also comment on gold. You have another newsletter on gold. So, you think gold has definitely bottomed here?
Oh, no question about it. You got to buy gold. You got to buy gold. We don't have time to go into it, but gold put a double bottom in. The hedge funds have liquidated all their futures, and physical demand is dominating. All of the reasons Wall Street gives you to buy stocks is a stronger case to buy gold. But we can talk about that another time.
Yeah, I completely agree, Ned. And I just want to thank you again for your time, Ned. And you've definitely educated myself and our listeners about the agricultural sector at more. So when it starts from seed all the way to the table for the food. And can you please tell our listeners about your different newsletters?
Yeah, I publish the Agri-Food Value View, and we publish a monthly and 2 interims, and the website is valueview.com. And it's been fun, Jason.
Well, thank you again for your time, Ned, and hopefully we'll have you back again soon to talk about a subject I like, which is food.
All right, hope you get all your snow shoveled.
Okay, thanks, Ned. Bye.
All right, bye-bye.